Wednesday. I feel like sometimes we talk on Thursday, but here it is Wednesday, almost the end of January. And I'm obsessed this first quarter with more listings, right? So that's why we picked a new topic today, and I wanted to bring in a couple of experts to help you. So first of all, I have Sean Farr. Sean is our expert on how to find the pre-foreclosure data, because some of you are going to be distracted if we jump into the content today and you're like, well, I love this, but I don't know how to get it. So we thought, we're just going to take the first 10 minutes, tell you, how do I find the pre-foreclosure data? Then I'm going to interview someone who's a wonderful client of Forward Coaching for many years, Robert Barksdale. And Robert closed over $900,000 in GCI doing the pre-foreclosure work last year. He's had a long history of many years of this. He is a true expert. And I wanted to let you know, Robert is not here today to sell you anything. It's not about selling you a course or anything like that, but he is an incredibly gracious man and loves to make connections with agents across the country. So I'm going to make sure that when Robert speaks, he gives you his contact info, because you may have some follow-up questions for him. And he's already told me he is delighted to speak with you and help you, because he's just a cool guy. So what I want to do too, as we go along, please, let's make this super engaging. Type your questions in the chat box. Sean's going to share a few slides with you, but then Robert and I are just going to go free form. I'm going to dig in. He's going to tell you exactly how he created $900,000 in GCI in pre-foreclosure. Now, I'm going to say one last thing, and then we'll get this party started. Maybe after today, you might say, this is not for me. But that's okay, because as we explore different opportunities to find listings, it's not us saying you must go do likewise. It's the menu of choices so that you can create 5 to 6 strong lead gen levers for listings, with 1 or 2 being your primo specialties, right? So you're just going to listen with an open mind, decide, is this for me? So Sean, just to kick us off here, if they want to work this niche, what's the best way for them to quickly, easily, and affordably get this information?
Yeah, that's a great question, Debbie. So can everyone see my screen? Debbie, can you see the slide here?
I can see it. Mm-hmm.
Yeah, it's perfect. So there's a lot of companies out there that are going to sell you pre-foreclosure data. LandVoice happens to be one of those. It's pretty inexpensive data. If you only want pre-foreclosure data, it's going to cost you $40 or $50 a month. You can call LandVoice and we can take care of that. We're going to send you new pre-foreclosure data every day. So you log in, you've got new data to reach out to and make those contacts. What I want to do today, Debbie, is not really talk a lot about LandVoice, but I want to geek out about pre-foreclosures for just a minute. Okay. So I want to show everybody what state they're in, how pre-foreclosures operate, so that you know what exactly is the information that we're working with and how that shows up for you in your account. Now, each of you, if you have pen and paper, write this down. You're in one of 2 different types of states. You're either in a judicial state or a non-judicial state. And what we want to talk about today is what state you're in. And for just the next 5 minutes, and we'll let Robert take over this. What state are you in? And more importantly, how do pre-foreclosures work in your area? Now, some of you guys already have like a bachelor's degree in this, and I get it. But there's a lot of you that don't. You haven't worked with pre-foreclosures since 08, 09, 10. So let's just remind everybody how this works. So with pre-foreclosures, I've got 3 slides. This is the first one. Here's the next slide. So we've got judicial, non-judicial states. If you're in a judicial state, typically you're looking for a lis pendens. This is when the pre-foreclosure process begins. If you're in a non-judicial state, it begins with what we call an NOD, or a notice of default. Then, after that lis pendens or notice of default is filed, the clock starts ticking. And basically what that means is the bank now has to wait a certain period of time before they can actually foreclose on that property. In Texas, it's like 60 days. In Illinois, it's closer to 6 months, right? And so this process begins. And then what happens is as that auction date gets closer, they have to make a public notice, the bank, before they can actually schedule the auction. So they make a public notice in the paper, and that's what we typically call a notice of sale in a judicial state or a notice of trustee sale in a non-judicial state. Now I'm going to show each of you your state and what that looks like. Then if it goes to the auction and it doesn't sell, it becomes bank-owned or what we call an REO property. And that's that status here. So in your system, when you're using LandVoice or any other data supplier out there, you're going to be looking for a lis pendens or a notice of default first. That's early in the foreclosure process. And then a notice of sale or a notice of trustee sale is typically 2 weeks to 6 weeks out, depending on the state that you're in. So let's just show you this real quick. These are the different states, and this will tell you, okay, I'm in Arizona, someone just typed in. So if you're in Arizona, you're in a non-judicial state, you're looking for a notice of default. Again, those that are in judicial states, you're looking for a lis pendens. If that makes sense to everybody, now you know what state you're in, and typically the status of lis pendens, notice of sale, or in a non-judicial state, notice of default, notice of trustee sale is what you're looking for there. And Debbie, essentially that's it, right? So now what we're looking at is we're looking at a list of homeowners that need to list their home or get caught up on their mortgage before they lose their home at the auction. And so for us as real estate agents, as professionals, we want to educate the homeowner and help them understand and know that, hey, you're in kind of a tricky situation, and there's a lot of motivated sellers that need to list now, save their equity, save their credit, get their home on the market to get it sold so that they don't lose their equity, their home, and their credit. And so you as a professional can really step in a really timely, it's an opportunity to really help, right? And offer a service that's important. Now, Robert, you probably have a really good process for this, but I'm just going to add one tip. If you ever do reach out to a pre-foreclosure, I typically don't recommend that you call or knock on a door and tell them that they're in foreclosure. They already know that. They typically don't need that information told to them. My recommendation is to treat that homeowner like a just listed or a just sold script, meaning I will make a contact and let them know, hey, I've just listed a home or I've just sold a home in your neighborhood. And I was just reaching out to see if you've ever thought about selling. And typically for me, Robert and Debbie, that's a better way to start a conversation than to just, and Debbie says this a lot, to stay within rapport. It helps us to have a good conversation. Let them actually state, actually, I'm in a really tricky spot right now. And then you're able to show empathy and help these homeowners in that tricky spot that they're in.
So Sean, I do know that Robert's approach is more direct, which he'll share. Yeah. However, I think a great option is to have a couple of approaches.
Definitely.
Right? Because some of you will say, hey, that would be easy for me. I could do what Sean does. I could knock on a door. I could make a call, and just as if I'm just randomly doing lead gen. The tricky part of that is they may not confess, right? That they're in that situation.
Very true.
But if it's the only way you'll work that NOD, just like working a divorce filing, right? Same type of thing. You're not going to show up and say, hey, I know you filed for divorce, because maybe they didn't even know their spouse did it yet. But Robert has a completely different approach. Choose, right? Choose and test and see which one works for you. Now, when I see, before you leave us, someone saying, hey, I'm in Indiana, how do I get the information? Well, they could sign up for LandVoice. I know that there are other ways to find it, Sean, like Retran, Realty Track, Property Radar, Property Onion, sometimes even Zillow. What would be the benefit of utilizing LandVoice over those? Do you need to use them all? And then Robert can share some thoughts later as well.
Yeah, there's a lot of different ideas and thoughts. Zillow, you can go to Zillow. You can go to your county record or your county website and find them there. And you can do both of those things for free. You can also go to your title company and get them there for free. Why does LandVoice charge for it? Well, what we do is we take that list that your title company has, that your county has, that Zillow has, and we're going to append all the contact information. So we're going to give you the homeowners' phone numbers, their email address, their address, and a lot of other information. It'll show you dates and other things. Title company will give you some of that as well. But the difference is with LandVoice, we're going to find all the contact information on that homeowner for you.
Okay. And again, before you have to run, you said it's about what, $49 a month for just the NOD portion?
Just the NOD. You can bundle that with expireds and FSBOs and our neighborhood search tool for about $100 a month, or you can just pay for the NOD list pending list. It's going to cost you $40 a month just for that one list.
Okay. And how do they get in touch with your team, Sean?
Yeah, so I'm going to put the URL in chat. It's landvoice.com. You can go there and sign up, or you can just call our team at 888-678-0905, and I'll put that in chat for everybody.
And Cynthia, NOD is notice of default, right? Or as he said in the judicial states, list pendants, like pending lawsuit, right? So there's a pending event coming where a clock is ticking and they are not making their payments and they are running out of time, right? So Sean, thank you so much for joining. Please get that in the chat box for us, if you will. That's awesome. And then I guess you're going to exit your slides so then I can see Robert full screen.
Definitely.
And we will see you again soon. So now you guys know how to get the data. Now Robert's going to talk with us about how to really get into the nitty gritty of working the system. You know, Robert, I think with, any new endeavor, we have to do a quick little checkup on our mindset, the limiting beliefs around tackling that project. So, help us with this, because maybe thoughts are like, gee, they're down and am I taking advantage of them? And, this feels a little creepy and scary to me. And are they going to be mad at me when I talk to them? Talk to us a little bit about what is your mindset around this? How have you seen this be, I guess I want to say, valuable to those that you've worked with in the last, how many years now, Robert?
45 in real estate, 20 in foreclosures.
Okay, so tell us a little bit about that, the mindset and how you feel you bring value.
Well, foreclosures are usually caused by 4 or 5 reasons. Divorce, like you mentioned, loss of job, too much debt, death in the family. And, recently a lot of people overpaid for homes and then the interest rates went up. So the person in foreclosure is facing a life crisis. So when I go to their door or I call them, I feel like I'm the answer to their problems, because no one ever just says, I'm not going to pay my mortgage. There's a life situation that's happened. So you have to feel like they're lucky to work with you and that you're the answer to their problems, because you're going to get every reaction at the door. Some of them are going to be happy to see you because they don't know what to do. Some of them are going to deny they're in foreclosure, like you mentioned. Some of them are going through a bad divorce or a spouse died, so they're really distraught. So you have to really feel like you are there to help them and not that you're there to take advantage of them.
One of the people I've coached in years past that also worked notice of defaults, he said, as I'm getting ready to call them or go to their door, he said, I'm saying in my mind this affirmation, they really need my help. They really need my help, because he said it puts me in the right, energy space, if you will, when I speak to them.
Yes.
Also, Robert, I know you're there looking at, because we've talked so much about this. Mm. Is there another option or solution? And if there is, you often help them find it.
Yes.
They keep their home. You earn nothing. However, these become a valuable future contact in your database, right?
Definitely. So what we'll do, we usually will help them either A, sell the home, B, we'll do a loan form, or just C, answer any questions they have about a modification. A lot of times the lenders will do a modification and you can just give them advice on how to get the paperwork done, because they really don't need to pay anybody to do a modification. If the bank's going to do a modification, they're going to work directly with the homeowner. So there's no need for them to pay anyone if the bank's going to agree to modify the loan.
So if you think, and Robert, maybe you can type your contact info in the chat box for everyone while I'm expanding on this a little. Mm-hmm. So if you go into that, what I used to say is, I want you to know I do not work for any bank. Mm-hmm. And I'm not here to sell you any service that you don't need. I work with people who are in your situation, and potentially there are options to save your home from foreclosure. And then if that does not work for you, then I could help. Like, I'm there to say, hey, there's other options. And I'm going to let Robert do a much better job sharing his scripts. But I think we got to get our minds around the fact that these are people that, for whatever reason, are in this situation. And Robert, there was some data out recently that a lot of notice of defaults can even have as much as 50% equity in their home that they're risking. So are most of the people you're helping, are they upside down?
Debbie, it's the exact opposite. I haven't done a short sale in about 7 years. Almost everybody in California has equity. If we do run across that rare individual that's upside down, which we don't have that much of that in California, a lot of times the bank will allow us to do a short sale, which looks much better on someone's credit as opposed to getting a foreclosure. But honestly, we're seeing, typical homeowner in, say, Riverside County or Los Angeles County, they bought the home 15 years ago. A life circumstance happened. They owe $350 on a house that's worth $900. So, we're seeing people with, especially in LA County and Orange County, 6, 7, 800,000 in equity. And a lot of those people, unfortunately, still lose their homes because they're just not ready to sell the home and they're emotionally attached. So our job is to go in and show them why either selling the home, getting a loan if they have enough equity, or working out some type of modification with the bank is better than doing nothing. A lot of times they're depressed, they're not going to work, they've lost a job, so they're not even thinking about the house. That's like their fourth problem. So you have to move them to action, is my saying. Move them to action.
So then you've saved, I know because you've told me stories, people who are a day or two away from literally losing the property. Yeah. Do you find that when you're working in this niche, that going to them early on works better, or going to them because I know they could cure it, like if it just happened, they could solve it, or maybe they're a little bit still so deep in denial thinking they'll solve it. So is your success with them better if you wait till closer to the end? Or if you go in at the beginning, or beginning, middle, and end? You know what I mean?
Actually, what you just said, beginning, middle, and end. And that's a good question. A lot of people think that just working with people that have an auction date is better because they have to do something. Actually, people that have a notice of default are great to work with. One, many times it's their first time having a notice of default. So they're extremely nervous and they want to do something right away. Number two, a lot of times they don't know that after that notice of default, they have at least in a non-judicial state, another 3 months and 21 days. They don't know that. So they're ready to do something right away. On the flip side, if they do know the process and they just got a notice of default, they might not be motivated to do anything because they know they don't have to do anything for another 3 months and 21 days at minimum. So notices of default are great, but they also have a downside. Auctions are great because they have an auction date, so they have to do something fairly quickly. However, a lot of people, Debbie, that have auction dates have learned how to work the system, so they push the date back multiple times. Because some lenders, if you apply for a modification, even if they've already denied you, they have to delay the auction. Other times, homeowners that have an auction date will just file bankruptcy, and they'll keep doing that over and over again and then dismiss it. And so they are able to push the date back. So both notices of default and auctions are good. It just depends on the homeowner and their mindset and how good you are at motivating them to take action.
So let's go back to some basic things. So first of all, you're mentioning California. but I know you also partner with agents all across
Definitely.
the United States, right?
Correct.
So Sean started off with putting that information up in the beginning. I suppose step one, it would be pretty easy to Google what is the foreclosure process on mortgage in that
Exactly.
state, right? I mean,
Yep.
or Chat GPT, whatever. Like that part is easy. You can figure that out quickly. Talk to a title rep if you have a title rep you work with. But that access to that information, super easy in your state.
Exactly.
Then I think a question was, what is a loan modification? And some of us have lived the hell of that many years ago, but many today don't really know what is that modification and who would qualify for that. So I don't want to spend a lot of time on that, but if you can give them just a couple of quick tips there.
Definitely. Loan modification is when your lender will take, say, you're 30,000 behind, they will allow that to be pushed on into the back of the loan. So instead of owing 300,000, now you owe 330,000, but you're out of foreclosure, and they may lower the payment to something that's more affordable. If the lender's going to do that, they're going to work directly with the homeowner. There's no need for a third party, and they probably modify 10 to 15% of the loans. Banks don't really want to modify because they make more money if they foreclose, but they do 10 to maybe 20% of the time, they will allow homeowner to get a modification if they are behind on their mortgage.
Okay. And then Anne was wondering, getting an equity loan or getting a loan, a refi, whatever, because their credit's terrible, right?
Exactly.
Because they're actually in foreclosure. Is that a hard money loan where they pay a bit more? What happens there?
That's exactly what it is. And it's usually for a non-owner occupied property. They'll do a hard money loan, interest only, to bring the home out of foreclosure. A lot of times homeowners just have a hiccup and they might be back on their feet. So even though the payment goes up a little bit, they're able to afford that. And that's kind of the lesser of two evils, where they don't want to lose the home. So they'll take a slightly higher payment in order to keep the home. But that's in a case by case scenario, because you have to have a pretty good amount of equity. And then a lot of investors only want a loan if it's a non-owner occupied.
Okay. So if it's owner occupied, they worry it's just going to spiral and get deeper.
Exactly.
So it's not. So in that case, they may need to go see if they can have a personal loan.
Exactly.
From a family member, from someone else. And if that's not an option, then potentially they need to sell the home.
Sell the home. Yeah. Which isn't a bad thing. Yeah. If they have to sell it. Yeah.
So then and I'm not going to get into the weeds. Some of this stuff, guys, you're going to have to research in your own state on your own, because it won't apply to everyone. And subject to that isn't really relevant to the NOD topic. So probably ask your lender about that. They can absolutely help you. But Alex is asking, how does the bank make more money if they don't do the loan mod and they actually foreclose?
Because a lot of times homeowners or investors are paying over what is owed on the home. So a home, say in Los Angeles, where the homeowner owes $400,000 at auction, it might sell for $650,000, $700,000. The banks, when they modify, they're allowing somebody who hasn't paid in a year, 2 years, to take that amount that they have not paid and put it on the back end of the loan. So that stretches out when the bank's going to get that money 20, 30 years, whenever that home is sold or refied. Banks a lot of times would prefer, especially if a homeowner has a good deal of equity, they would prefer to foreclose, because the homes usually sell for more at auction than they are worth. If it doesn't sell for more, then it becomes an REO. Then the bank can just turn around and list it with an REO agent and sell it and make more money than if they did a modification.
Because, guys, if you understand, they're taking a risk on somebody that's already not paying them.
Exactly.
They're delaying getting that money that they're due. On the other hand, they've got a likelihood that it will sell, or even on the REO will sell for more than it's due. It's just, but sometimes they just don't want to take it back, right? Or they might, look at that circumstance. Jan is asking, when you say auction, do you mean sheriff's sale? But it's not, I know it's different in each state, but maybe talk about what typically happens at an auction. So it hasn't been saved.
Okay.
You're down to that last day. but there's still a chance to save it. What happens there?
So before you speaking to before it goes to auction, like the day
Yeah, so
before?
it's or yeah, maybe the day before, and then what actually happens at auction that we should know about to be able to warn them.
So the day before auction or 2 days before, a lot of times the banks will give you an extension if you send them proof of funds, a bank statement showing that your buyer has cash, an estimate from escrow, as well as a purchase contract. And the banks a lot of times will give you an extension of 2 weeks, 4 weeks. We've stopped many foreclosures a day or two before the auction, like Debbie stated. However, if it goes to auction, literally in California, which is a non-judicial state, so it doesn't have to go to court, they hold the auction in warehouses, office buildings, hotels, and behind the courthouses. Like in LA County, it's on the steps of the Norwalk courthouse. And the home, there's an auctioneer, there's 10 or 15 investors, there are 2 or 3 people who are going to lose their home to auction, and they just go down the list. They have a 9 o'clock list, an 11 o'clock, and they auction off the homes. And so it's really sad because you'll see a lot of times the homeowners there hoping their home doesn't get auctioned, but many times it does, especially if it has a lot of equity. And the investors there have to pay with cashier's checks. So if you're buying a home at auction for $500,000, you have to have cashier's checks for $500,000. And so I tell the homeowners, this is what's going to happen. You have an auction date coming up on February 3rd at 9 o'clock. And the bank is going to sell your home. So we try to prevent them from waiting till the day before or something like that, because then a lot of times it's too late.
Which, to answer Wes's question, yes, you have over the years managed to work hard to find a group of legit investors that, are not, trying to take advantage. Of course, they want to buy, they want a good deal. Every investor does, but you come in with cash offer if they need it, or reach out to your agent friends across the country who have shared with you that they have investors, and you'll say, hey, I've got this property, might be something like your investor is looking for, but we need the cash like in 2 days.
Exactly. Right? Yes, exactly. So yeah, that does happen, and we got to know the process. So we'll have the homeowner order a payoff. We also will get a title report, usually within 24 hours, and then we'll send that to the bank so we could have maybe a little more time to sell. But a lot of times, Debbie, we're closing escrows in 3 days. If you have that title report and the payoff from the bank, that's really all you need. And you should do your research if you're looking to do this. Call your title company and see if there's any other liens on title. Maybe 30% of the time, there are other liens like IRS tax liens, state liens, judgments. So you have to clear those as well. And we take all that into consideration.
Right. So make sure you know all the liens on the property. The investor needs to know what that total number is. Obviously, you're trying to get the owner as much money, equity as you can. So in that price that you propose to the investor, right?
Yep, correct.
Yeah, and Saranda said it's intense. Yeah, she saved a cousin's house and there was less than a week notice. And she brought up a great point. They were embarrassed, right? And that's what happens. A lot of people, we look at it from a business perspective and think, well, I could understand how someone could fall into that situation. Life happens, but how could they let this go and get to that last moment? But there's all kinds of reasons. And one of them is just embarrassed, right?
Exactly. Yeah. So a lot of, I'm sorry, go ahead, Debbie.
No, you please, Robert.
Yeah, I was going to say a lot of times, it's because they've had, it's the home where they've had barbecues and birthday parties. All their family and friends know they live there, and they're trying to figure out a solution up until the last minute. They're trying to borrow money. They're trying to apply for a modification. They're looking to see if they can pull money out of their 401k. All selling car, everything you can think of. And then they get to that last minute and then it's like, oh, we only have a week. And it is intense. I like her word. It is. And so that's why I always say it's not for the faint of heart. It's a complete mind shift from doing regular real estate where everybody's happy. They call you to sell their condo because they just had another child and they want to buy a larger home, and you call them and they call you back and they show up for the appointment. Foreclosures are the opposite of that. So you have to have thick skin to work with foreclosures because it is intense.
Well, and I would think that you would have to chase a little harder to get them to do this, even when they say, I want to do it.
Exactly.
But chase a little harder to get the paperwork done, to get the things happening, to help them decide, are they moving, when are they moving out? And do some of your investors ever let them stay and rent the property?
Many times we do because we know that they need that money to move. They're not in a good position. So we'll close escrow and let them stay sometimes 30 to 60 days. What we do to protect both sides is we'll hold back a portion of the money in escrow. So if they have 30 days to stay after the close of escrow, we'll hold maybe 20,000 of their 300,000. And then we do a contract that says, okay, you have to move out by day 30. If you're not out, then we're going to charge you $1,000 a day. And we do a form. Escrow holds the money. Both parties sign that before we close escrow. And then we'll also go the extra mile of helping them find a replacement property because we already know the things they're worried about. They're worried about finding a place. And all right, when are they going to get the money? And well, my credit's damaged. So we'll explain to them, well, maybe we'll find a place and we'll pay 6 months in advance so that that landlord is willing to work with you, knowing that you just came out of a foreclosure situation.
Right. So you really don't just say, oh, deal is done. You're
Exactly.
up.
Yeah.
Turn through with that integrity. Okay. So
Mhm.
we kind of started at it. We went backwards, but I think it's, which is how to find them and some of the mindset around it, some of the process. But Brandon, your timing is perfect, which is okay. So how we've got our list. We know who they are. Now, what do we do? Do we
Okay.
Do we mail? Do we knock? What's our script, right?
Yeah, so that's a great question. I just saw that in the text from Brandon Lowry. My team has about 77 people, and we use about 7 or 8 different tactics. Now, you definitely want to call them because that's great, and I'll go into some of the ways we call and some of the tools we use. You also want to mail them postcards. I have a bulk mail stamp, so that allows me to mail to 1,000 people for $439. Which is much cheaper than whatever a stamp is now, probably 85, 90 cents. I don't know exactly. And then you want to knock on the door. And I have a script and it fits my personality, Brandon. When I knock on the door, I say, hi, my name is Robert. I help homeowners that are facing foreclosure. I want to help you stop the foreclosure on your home. Other people on my team are listing agents and they knock on the door and kind of say what Sean said. Hey, I want to know if you might be interested in knowing what your home is worth. Property values are up, interest rates are coming down, and want to see if you might be interested in selling. Other people go to the door and they say, hey, I'm here to help homeowners. It doesn't cost anything. We just want a 10-minute meeting to show you how we can help you for free. We literally on my team, Brandon, have about 7 different approaches, and it really has to be what fits your personality. I don't know if you guys can tell, but my personality is not one that's going to say, was wondering if you want to know what your home. I'm very direct. I want them to know I'm here to help them. I have some solutions for them that can help them. And I just want to talk to them for 5 or 10 minutes so I can go over those. If they want to work with me, great. If they don't, and if they're in denial or if somebody else is helping them, I don't worry about that person. I just go on to the next, because the thing about people in foreclosure is they have to do something because they have an upcoming auction date or a notice of default. So if that person doesn't want to work with me, we just go to the next person. We don't take it personal.
So you call them first.
Yeah.
Cannot reach them on the phone. They
Mm-hmm.
knock the door.
Yeah, correct.
Times of day than others that are better to knock on.
Absolutely. Absolutely. Afternoons are really good during the week, anytime after 2:30 or 3, because either they're going to be home or an adult child is home, or if they're not working, they're home. And then weekends, I would say anytime between maybe 9:30 or 10 up until about 2. After 2 or 3, people are at the mall, they're at Little League, they're at church, if it's a Saturday or Sunday. So definitely afternoons. However, if you can only door knock in the morning, mornings are okay because some people don't have a job or they work a swing shift or they might have an adult child at home. But we find that there's more success in the afternoons during the week and then between about 10 and 2 on Saturdays and Sundays.
And I think I've heard you say that if they can't get them on phone, you or your team can't get them, then you'll go back again. How
Yes.
will you go back? before you let it go and move on?
That's a great question. We say we go back, Debbie, until we get the final yes, they are going to work with us, or no, and we can tell they're not going to work with us. And that's why I think we're successful, because I teach my team, be willing to do what other people won't do. Most realtors or most of our competition goes one time, they leave something on the door. They might go back a second time. If I don't get a no, because I might go the first time and they say, well, my husband or wife handles that. They're going to be home after 6. Then I try to go after 6. No, you know what? We're trying to get a loan. Then I go back a third time and they say, well, my brother's going to let me know by Wednesday if he can give me the money. So I'll go back, say that following Thursday and say, okay, you didn't get the money. Let's get started, because we'll have an auction date in 2 weeks. Most of our competition goes once, maybe twice. My team goes back until you get that final yes or that final no. And sometimes, Debbie, you can tell on the first meeting, they're not going to work with you. No, I solved it. My sister is a realtor. If I sell, I'm going to use her, but I've already filed bankruptcy. I've already paid the money. I can tell that person's not going to work with me. So I just go on to the next one. I don't give them any thought after I can tell they're not going to work with me. I just move on.
It's interesting. An MIT study said that in sales organizations, 50% of leads are never followed up on.
Mm-hmm.
Percent that our salespeople will reach out once or twice, maybe 3 times, but that the magic happens between 6 and 12 attempts.
Absolutely.
So
Absolutely.
the question is, do you just call them every day? So I know you call them, then you go to the door, but let's say I haven't reached them. Do I call them again and then go back? You just keep alternating phone and door, right?
If I've talked to them at the door, I usually, and I've gotten their phone number, and they tell me, well, I should know something by, let's say, Monday. I'll follow up with the call. And if they don't answer, I'll go and knock on their door if it's in an area that's not too far away. And it's kind of like you get in a rhythm. Okay, well, they're not going to know by tomorrow. So let me touch base with them in maybe 3 or 4 days. And you just have to kind of match their energy. And you can tell, I need about a week, then I'll go back after that week is up. But what you said is absolutely correct. Because I'll ask a homeowner, how many people came to your house? Let's say 10. How many came twice? Well, you and one other person. How many came 5 times? Well, you. And that's what I teach my team to, like I said, be willing to do what other people won't do. And most realtors are used to making that one call. We set an appointment. We go on a listing agreement. We set the appointment for the photographer. The homeowner's there every time. We get the property listed. They answer our calls. People in foreclosure won't do that because they're going through something. So you'll even have them under contract, and then they'll go dark on you for 3 days. And realtors will say, oh my gosh, she signed a contract. We're in escrow. Now she's not answering my call. We don't worry about that, Debbie. We just go knock on the door.
Okay. So I know there's a lot of questions in the chat, but one I saw is, what if you determine that that property does not have equity? Can you just not help them, or do you get them tell them to go do a short sale? Like, what do you do with those, even though there may be
so that's a good question. So I want to list it as a short sale. So what I'll do is talk to the homeowner and say, listen, your house is going to foreclosure. The bank may allow us to do a short sale where you have a little more time in the house. Besides that, a short sale looks better on your credit than a foreclosure. So if you work with me, I will contact the bank and I'll try to get a short sale approved. I'll have them fill out a signature authorization, which every lender has. I'll send that to the bank. Once they authenticate it in 2 to 3 days, I'll start working with the bank to try to get a short sale approved. If the house is in not the best condition, it's much easier. If the home is immaculate, the bank may send out somebody to do a broker price opinion, and they may say, no, we're not going to allow them to short sell it. We're just going to sell it at auction.
Okay. And so what I'm seeing a lot in the chat, I'm kind of like Robert, guys, so please forgive me if I'm direct about this. Some of you are asking questions that as real estate professionals, you should already know in your market. Now, you might be brand new in the business, which is completely understandable. It's a lot to learn, but things about how does this foreclosure process work in my state? How many days from when it's filed to when it goes to auction? Like some of those questions, that is, I think of it like product knowledge, for you to be a wise advisor and expert. And actually, even if you never intend to work a notice of default, you may have friends or family that fall into this situation, and you need to be able to know what's going to happen here and what kind of advice. So I'm so glad you guys came today, because if you're going, wow, maybe I don't want to do that, but I'm realizing I don't actually know how this process works in my state, then when we're done here today, you need to figure it out. And trust me, it's not hard, right? You can go to lawyers that you work with, you can go to title, you can simply chat GPT or Google it for your state, for your market. Where's the auction held? If I'm located in Newport Beach, California, where's the auction held? Boom, it's going to tell me. Okay, so that part is not hard. Robert, when you, some of the people here, like I see Wes and a few others that have team agents, they are a team leader. Now, when you talk about your team, you have a crew of people who are licensed agents across the nation who don't have the level of expertise that you do, but they're actually willing to go out and knock on that door. And basically, they are appointment setters for you, right?
Correct. Mm-hmm. Correct.
So of that listing, if it's not local, because you're in California,
mm-hmm.
have a team in Boston, right?
Correct.
You appear via Zoom. How do you do that when you're not local?
That's exactly what we do. So we have, because we're in 15 or 16 states, so we'll do a Zoom. One of my team members will go to their home, because that team member's already knocked on their door or called them to get the appointment. We'll go to their home, set up a laptop, or many homeowners have computers and they've done Zooms, especially because that's what we did during COVID. So we just do a Zoom and we do a meeting just as if it was in person. I build rapport with them. I go over their expenses and their income. I show them why selling or getting a loan or doing a modification is much better than just doing nothing. And then I try to move them to action. So I'm kind of giving you the short version, but it's really about a 20 to 30-minute meeting, because you have to build that rapport so they trust you over the other 5 people or 6 people they've talked to. Then you have to build credibility. Then you have to go over the income and expenses, and then you have to move them to action. So a meeting with my team in Atlanta, Georgia is just like a meeting here in Southern California. We'll do a Zoom, and it's just like this. And I'll say, Mr. Jones, I really want to help you. I see that you're in a tough situation. You've lost your job. Let's go over your income and expenses so I can see what's the best way to move forward.
Exactly. And yes, I see words like empathy, and yeah, absolutely. I think if you hear Robert speak, though, this is not the approach of someone that's pitching something. Right?
Correct.
Like almost like a counselor. Or I read something the other day in a book that said people can make decisions much more easily or much easier if you give them 3 options, right? So, you have option number 1, we can get the home on the market, we can get that home sold. Option number 2, we can see if potentially there's a loan. Maybe it's got to be a friend, a family member, if a bank won't do it, and try to bail this out or cure it. Or option number 3, you do nothing and you completely lose any equity, lose the property, and it's very damaging to your credit. So let's really talk about, in your situation, what I recommend is the right option for you. Now, guys, that's not slimy. That's not salesy. If they say, no, I'm not going to do it, I'm just going to wait because I think I can fix it. Well, Robert's been out this long enough to assess the property, the situation, and decide, I think they can fix it. Okay, I'm on to the next, or I need to give them a minute, and then I'm going to circle back and I'm going to follow up in the future. Right, guys? So some of it is using your judgment, but that judgment grows over time. So Robert, this is so it's so complicated, really. Like, it's not complicated to figure out who they are or to go to the door and ask them if they want to sell. But some of the inner workings of the paperwork and dealing with the bank and some of the things that occur. So guys, I want you to know, as I said right up front, we're not selling a program, although Robert had created one that we sold before, but we're just not, he doesn't have time. We're not doing that right now. I'm not going to make off any money off of anything you and Robert might manage to do together, but he has got this great thing that he's done with many of our forward clients where he says, hey, you contact me, I'll teach you what I know, I'll help you with the first 4. You give me a split of that, then you're on your own. You're educated and you're gone. Or people say, well, I want to be part of your team, but I'm over here in this state. Teach me, send me out, coach. I'll go do it, but I don't know if I want to do that Zoom meeting. I don't know if I feel comfortable. So this is totally up to you guys. I have no dog in this fight. This is up to you. If you find this interesting and you think there's a way that Robert could help you, and that's my repayment to him for coming and really sharing his secret recipe, right? Sharing everything he knows. So Rob, let's go ahead and put in one more time. Pay attention, guys, because we put it in there 2 or 3 times. You're like, where is his info? So here it comes. And I see you also communicating with Sean. So that's good. So go ahead and take a look at that. So if you want to go to landvoice.com. And I don't really completely understand your question, although I think it's going back to when Rob referred to what else is owed on their property. A credit card is not going to be attached to their property, you know, I guess unless they didn't pay it for a long time and they filed pendants.
Yes.
So you're looking for recorded documents of liens they owe that are attached to that property. I suppose, Rob, it could even be a tax lien, right?
Yeah, it could be a tax lien. Yeah, because sometimes they foreclose as well. Usually those amounts are a lot lower than the mortgage foreclosures, but they foreclose as well. And when I do this, Debbie, I try to make it honestly very simple and almost 12th grade level. Most experienced realtors overthink it. My door knockers, I teach them, go out, talk to the homeowner, find out how much they owe, how much they're behind. And then after you leave the property and you set the appointment, look up the Redfin and the Zillow, because I just need a ballpark. I don't need to pull comps. I might not even get a deal with that person. So, and most of my investors pull comps. So I make it super easy. And most of the people that join the team end up staying with me because they're setting appointments. I do the paperwork, or I instruct them if they're out of state. This is what paperwork we're going to need. I make it super easy. So, so that's really, I don't know if you want me to answer any of their questions. Do you have any questions you saw, Debbie, that you'd like for me to
circle back to them? But really quick, just to go over that again, that was a new info to me too. So you don't over prepare.
Exactly.
Because that could be incredibly time consuming.
Exactly.
You know, you can run a quick search to see what the ballpark is of that home. And then you can go in and talk to them.
Exactly.
Yeah. So just don't get too much in the weeds of it. Okay, guys?
Exactly.
So, Char, you're asking how to connect with Robert. Look in the chat box. So then also, let's talk about, let's go back up. And Sarah, I'm not sure what you mean about not a ton of information here, because this is about listing and selling foreclosures. Right? Everything Rob has shared with you, and I'm actually thinking that maybe you got on late, because I know a couple of you are asking for info that we covered at the very, very beginning. Just that if you got on late and you missed some of the early part, no worries, because automatically tomorrow you're going to get a copy of this recording, because I knew you'd want to go back over it like blow by blow. So we started off with, where do you find these listings? And just to sum up again, because I saw that question, I think from someone that joined late, You can do multiple things. You can check out Retran, RETRAN.net, Realty Track, which is TRAC, Property Radar, Property Onion, even Zillow, and then one of our affiliates, Land Voice, in the beginning talked about a $49 monthly fee where they will kind of sort through everything, compile the data, owner's contact information, and deliver that up so you don't have to do all that if you prefer. And you can go to landvoice.com. So that's how you find them. And then we went over how to list them, which is the combo of phone, postcard, and door knocking. And then we talked about scripts. So if you missed that part and got on late, the scripts are absolutely there. And then the ability to handle the appointment either in person or remotely by going over their options, and then how you can guide and assist them. But you know what, Robert? There is one thing that we did miss explaining to them, the postcards. I know you talked about that you do it with a bulk rate stamp.
Uh-huh.
Tell them what is on that postcard that you send out.
So my postcards will have maybe 4 or 5 taglines, and one will say, we want to help you stop the foreclosure on your home. We have several options. We can list your home for you. We can provide a loan to bring the home out of foreclosure. We can sell your home for cash in as little as 5 days, or we can sell your home and allow you to stay there for an agreed upon time. Because some of my investors are looking for rental property. And sometimes we'll sell that, the homeowner will sell the home and we'll allow them to stay there for 30 days, 60 days. In some cases, they become a tenant because the investor said, hey, I'll let them stay here for a year and rent it back. And that's usually what people want to do. They want to find a way to save the home. So selling is kind of the last option in their mind. Maybe 2 out of 100 people will say, hey, I'm thinking about selling. The other 98% want to see if they can save their home. If they can't save it by either getting a loan or a modification, then we will help them sell it. So I have a very specific postcard that lists 4 options. Let's help you stop the foreclosure. We can provide a loan to bring the home out of foreclosure. We can do a refinance and give you a whole new loan. We can sell your house for cash, or we can sell your home and allow you to stay there for an agreed upon time. And that time, Debbie, may be 2 weeks to a year. It's whatever is negotiated, whatever works for both parties, because we want to make the deal a win-win. We don't want to deal with someone that's taken advantage of. We don't do those type of deals.
So, Carly, I know I saw your note earlier. I knew what you meant, girl. And so Carly's point is, she's a little nervous about door knocking, and does that seem risky? So what I will say to all of you is, you've now heard there's a 3-prong method to approach these. Mm-hmm. Robert chooses to do all 3. You actually could choose to do whichever one works for you. And I will say, though, that mailing postcards without some type of conversation or interaction, I have had others over the years that did that and told me it was very marginally effective. So I wouldn't want you to spend a bunch of money thinking that a postcard will make your phone ring off the hook. And of course, we know, I'm not an attorney, but I want you all to research the do not call laws in your state, so that if you're reaching out to these people, you're aware of that and you're doing what your brokers and, people recommend. So again, this is Robert's path. Doesn't mean you'll even choose to do it at all. And you might say, I want a different path. Or maybe I'm only going to go into communities, because we all know there are certain communities in our markets that have a little higher crime that you might be nervous about. So maybe you say, no, I'm going to choose the communities I know well and I feel comfortable, or I'm going to get a partner, and I want 2 of us to go together. So that is all up to you. I want you to be safe. I want you to do what you feel comfortable with. and what is legally appropriate, and compliant with the do not call law. But Robert is a pro, and he absolutely it can answer your questions. And Lorenzo, I really appreciate your question, but since we're not really here to sell you on working with Robert or not, I'm going to let you two discuss how he works with the agents he partners with. I'm going to let you do that offline because I don't want to take everyone's time for that. So just feel free to reach right out to him. Okay, Robert. So we're almost out of time. I think I caught most all of the questions, but is there any last couple of things you would like to share? And then if they've got another quick question, we got about 5 minutes. They can.
Yeah. Yeah, I would just like to say foreclosures are an excellent opportunity to help homeowners. You're going to have limited competition. I have 180 agents just in my company, and I'm the only one that focuses on foreclosures for the most part. And you're helping homeowners, and just be willing to do what other people won't do. I don't love door knocking, but it's a great way to get deals. I also do. I have a YouTube channel with a lot of videos on it. I have a Facebook, Instagram, and TikTok, and I'm almost 58 years old. I don't really like social media. So what did I do? I hired somebody to do it because it's necessary to have technology. Got to have a website. You have to have that YouTube because people are going to research you to see if you're legitimate. They're going to look up your license. They're going to look up your website. Do you have testimonials on there? So you have to kind of come out of your comfort zone if you're going to do foreclosures. And that's why a lot of times people who are new to real estate do great because we don't have to unteach bad habits of, just wanting to sit open houses and farm a neighborhood and work with their sphere. Foreclosures, you have to be a little bit more of a go-getter. So that's what I would say. But there's limited competition.
Yep. And one last really quick question, which is a great question. What do you use, like CRM, track all this and follow up with these people and have your reminders and your callbacks?
So Retran, which is the website in Southern California, allows you to take notes on each lead. Also, Mojo, the 3-dialer, allows you to take notes and put notes so talk to Mr. Jones, call back on this date. So the systems we use, and then Retran and Mojo, the 3-dialer, interface. So I can upload a list from the Retran website into the Mojo dialer, and I can keep notes on both. So it lets me know who I need to call. And you can put a calendar and it'll say, call Mr. Jones on February 3rd. So those are two really good ones. Property Radar is really good, and Property Radar is nationwide as well. So that's another really good website.
And you mentioned Mojo, which is a great dialer, and you mentioned the triple dialer. Again, I'm going to be like the legal police here for a moment. I know many of your states, it is not allowed any longer to triple dialer. I imagine you can use the dialer. It's not just
single dialer. Yep.
Use the single dial function.
Yep.
The technology. Well, I just really want to, say congratulations to all of you for just investing like a whole hour, which we really appreciate because we know that's a lot of your time. And just, say thank you to Robert. If you enjoyed it, you can type in the chat box, maybe type your best takeaway. And remember, as we started this out, we said, and that was Property Radar, the last company, this may not be for you. So this was not a pitch to get you to do foreclosure properties. It was just information for you to explore and say, is this an opportunity for me or for my team or someone on my team? And if so, I really trust that you guys will all show up with a gracious heart, as Robert does, and take really good care of these people because, they really need your help, right? Well, thank you again, Robert. And
thank you, Debbie, for having me.
Great friends and connections here. So thanks.
Awesome. All right. Bye-bye.